play right here, right? CE, right? And if you don't trade for valid gaps, then you can go ahead and say, then you can be like, okay, let me go ahead and trade the order block, right? For me, I've been trading order blocks more and more often. So I would have went ahead and took the order block play right here with a stop loss right below the order block, right? I like my stop losses to be pretty tight. So I would have taken that play as well, right? And then what do you know? Price comes down, taps the order block, right? Takes out the liquidity that's on the higher time frame. And then we go, maybe we go higher to the target, right? You see how easy that was? Like that was really like it was really simple. I swear to God, like all you did again. Let's rewind it back so you guys like kind of understand that, right? So I want y'all to stop marking up all that shit on y'all chart. It be bothering my soul. All right, you want to go ahead and you want to identify, right, the liquidity that price needs to attack to go to your target, right? So you're identifying your liquidity, you're identifying your target. Then you're identifying your key area that price is likely, right, to bounce off once it takes, right, the liquidity. Okay. Now, once you go ahead and you identify your key area, you then want to drop down to a correlated time frame, right? That price is likely, right, to bounce off of, right? Sometimes you might not find a key area within the 5 minutes. Sometimes you might have to go to the 15-minute time frame, right? We'll get into we'll get into that. We'll get into that. Okay. And then you want to go ahead and you want to identify, okay, if price is going to sweep out this, right? This low right here, right? I want to identify, okay, where is price likely to bounce off of after sweeping out that low? Okay, I have again a for valid gap, and then I have an order block. I have both of these, right? It depends on what you trade. If you trade for valid gaps, take the for valid gap with a stop below the 3 candle formation that forms the for valid gap. If you take the order block, take the order block with a stop below the order block, right? Put a limit at either the opening, right, or CE of the order block, right? Depends on like, what you trade, how you trade, right? And then you wait for price to take out that liquidity and then go to your TP, which is the high. I do this every day, y'all. I swear to God, I don't do shit different. I don't know if y'all think that I got some secret magic sauce. I'll be whipping it up or something, but I promise you, I don't do nothing else but this shit. I don't have no secret sauce. Okay. Let's look at some more examples of how this looks, right? Matter of fact, let's look at an example today, right? Let's look at today's example, right? How I came up with the trade that I came up with today, right? On the 4-hour time frame, right? Ooh, for valid gap. Okay. For valid gap. Cool. Right. This would be an example of price just tapping a key level. It's just tapping a key level to go lower, right? Now I want to identify my target, which is I wanted to see weekly gap get filled, if I'm being honest. So I wanted to see. So I have my key area, right? There isn't no liquidity on the 4-hour. Cool. That does not mean that there isn't liquidity there. It just isn't liquidity on the 4-hour. Okay. Now, if you go to the 15-minute time frame, all right, let's go to the 15-minute. When you go to the 15-minute, you want to identify your liquidity. Here it is. We had equal highs sitting right here. Okay. So equal highs sitting right there. Liquidity, right? Let me go ahead and just rewind this back right here. All right, so we have equal highs, right? Liquidity, we're inside of a 4-hour for rally gap, right? Now I want to find my key area that price is likely to bounce in on the 15-minute time frame that's within this 4-hour for valley gap. Here is my for valley gap. My key area right here, which is the for valley gap. I have equal highs sitting right below the for valley gap. So what did I do this morning? I placed the limit right here, right? I wanted even more confirmation. How did I get even more confirmation? I went down to the 5-minute time frame and I noticed, dang, there's an order block sitting right here, right? So marked out the order block, marked out the opening. I moved my limit up some more right there, right? Nice 20-point stop loss, right? Aiming for the lows down here, right? We got about 130 points out of that. Market opened up, tapped me in, and went down immediately. Why? Because there was equal highs sitting right there on the 5 minute time frame. Okay, inside of a 4 hour for Valley Gap. Right. I did not go ahead and choose um I didn't go ahead and choose this order block that was sitting right here, right before market open. That didn't make no sense. It wasn't in the 4 hour order. It wasn't in the 4 hour for Valley Gap, right? I had two key areas marked out. I had this order block, and then I had this 5 minute order block marked out this morning. I wanted to see price either tap this area and shoot down, or I wanted to see price tap this area and shoot down, right? Why? Because there was inducement and all that other extra shit was inducement on, all that shit that that good shit that I'll be trading. But yeah, so simple reason of why I did it. Simple reason. Okay. We can look at I want to look at an example from let's do a 15-minute, 1 minute, 1 minute. Yeah, let's do that. Let's do a 15-minute, 1 minute. I know a lot of y'all like trading on a 1 minute time frame. I do too. I ain't gonna lie to you. I be trading. I mean, I guess this can be an example of a 15-minute, 1 minute, right? Because we have, again, the equal highs right here. We have the for Valley Gap that is sitting right here, right? And then if you go to the 1 minute time frame, you can then find you another key level within this 15-minute order block. 15-minute for Valley Gap. What do you have? You have a 5 minute, a 1 minute for Valley Gap now, right here, right? So now you have stacked key confluences. Okay. What does that tell you, right? We know that the first one tapped this area right here, right? So now with that 1 minute, you can now move your limit up to the 1 minute CE, right? Which is slightly higher, which gives you, right, a little bit much more wiggle room, right? And a lesser stop loss, right? So you can have a lesser stop loss, right? I think this even went up to like that one. Did it go up to that 1 minute order block? It did. I think it did. Did it go to that 1 minute order block opening? Let me see. No, it didn't. Well, it did, but I think like after. Yeah, it did. It tapped that 1 minute order block like right after. Then came tapped it again, and it went down. But the premise is I want you guys to stop marking out your charts with 1,000 markings, right? It's not that serious. All you need is one higher time frame key level. Outside of that higher time frame key level, right? You then want to identify your liquidity. You want to identify your liquidity first, then your higher time frame key level, because you don't know what higher time frame key level price is going to tap into until you identify your liquidity. I'm just going to give you an example now, right? If I'm looking at this area right here and I'm saying, okay, I want to see price reverse. I want to see this high come get taken out. Now that I have identified this high right here to be taken out, right? I either want to do one or two things. I either want to mark out, right, this 1 hour for Valley Gap that's right here, right? And I want to see price come to that 1 hour for Valley Gap, or I want to go to the 4 hour time frame, right? And I want to go ahead and I want to mark out the entire 4 hour for Valley Gap, right? Why do I want to do that? Because price can either come and tap CE of this 4 hour for Valley Gap, or it can go to the 1 hour time frame, right? And tap this 1 hour for Valley Gap and then reject. Either way it goes, these are my key areas, right? Now, from there, right, once I mark out these highs, right, let's just say I marked it out on the um on the 4 hour time frame, right? And I'm looking and on the 4 hour time frame, and I'm looking and I'm saying, okay, I want to see, price takes out this high on the 4 hour and tap into the 4 hour CE. I then want to look for a key area that's within this area that's above this liquidity point, right? What do I see on the 15-minute? I see this 15-minute order block that's right here, right? So I want to go ahead and I want to mark that order block out, right? Pull this over, right? And then I want to mark out the opening of this order block, right? What does this tell me? Okay, I have price headed to these highs. I have previous day high right here, right? Which is a good key area, right? I can see price sweeping out these highs, either tapping the opening or CE, right? Of the order block, which the CE of the 4 hour for Valley Gap is also within this area, right? This is your trade. Either right here, right? With a stop loss that's big enough to cover CE, or your trade is at CE of the order block and the for Valley Gap with a stop loss above the order block, right? This is your trade, Okay, this is how you get a good, decent trade. This is how an A+ setup presents itself. Okay, I don't know who's teaching y'all the bullshit that y'all keep doing, but y'all gotta stop that shit. Swear to God, y'all gotta stop that shit. All right, then I'm gonna open this. We're gonna do some questions. All right, I want y'all to raise y'all hand for questions. All right, I want y'all to raise y'all hand for questions and shit. I said I want y'all to raise y'all hand for questions, and somebody immediately asked me anything. All right, listen, I want y'all to raise y'all hand for questions. I'm gonna unmute y'all, and we'll record the question Q&A session. Okay, we'll record the Q&A session. Do not come off mute unless I call on you. I would appreciate that. Y'all so kind. Um, go ahead, Tasia.
Hey, Luchi, how you doing?
What's up?
Not shit, not shit. Okay, my question was, when you went over the full hour, I think a few of us had this question in the comments as well. The full hour, you said there was no liquidity there, and I'm thinking, that it is. So I was just trying to see how didn't you see any liquidity on the 4 hour at all? Was it because you went down to the 1 hour and saw equal highs? Why
So,
wasn't it any
so,
liquidity?
so, so, an imbalance is internal liquidity. I think people misconstrue that, right? Anytime you see an imbalance, there's liquidity sitting on the lower time frame, right? The premise of it is to listen. Um, when it comes to looking for your liquidity points, it's just two ways to look for your liquidity. Majority of the time, it's either sitting on the same time frame and you just mark out a high or low, right? Or you mark out a gap, just like this, right? Or just like this right here, right? And then you drop down to the lower time frame, right? Where you can actually see the liquidity, right? If we jump down to the lower time frame right here, you see the equal highs right here now, right? Here's the liquidity, right? If we go over to this um you see the liquidity right there, right? So if you are looking for price to bounce from out of a gap, right? Liquidity has to be sitting within the gap. If liquidity is not sitting within the gap, it's most likely going to be blown through. The
Okay, so
liquidity could be
basically
on the lower
something that
time
needs to
frame.
be swept, right? Like if
Yeah,
it's not swept or if it's equal, yeah,
yeah.
or
If
imbalance.
if there's no liquidity that is going to be swept, um, that is going to be swept, then yeah, you most likely need to just not trade that shit.
Okay, thank you.
All right, go ahead, Monica.
Luchi, question for what your trade was this morning. What
Yeah.
do you not think that that 4 a.m. candle would be the target for the high?
Are you talking about are you talking about this one? This one right here? This high?
Yes.
Because inducement, right? So if you look at the 4 hour time frame, first off, right, we came and we tapped into this gap and we gave a candle to closure back to the downside. Now, if you go to look at the 4 hour time frame, right, you want to start to look at what structure did. What did I teach y'all about inducement and how inducement plays, right? We get a sweep of liquidity first, right? Then we get inducement right after, right? And
Hmm.
then that inducement leads to what? What did I teach you in the last in the inducement class? What does inducement lead to?
Break a structure.
Right, a break of structure. So we got a break of structure here, right? And then we got a break of structure here to the downside, right? So what does that tell you?
That we're gonna go up to sweep and then go back down.
Yes, exactly, right? But inducement tells you what though? That what is protected.
That high is protected.
Exactly. So that's why I wasn't looking for price to sweep that high because this high is protected because of inducement.
Okay. Thank you.
No problem. Bella.
All right, to piggyback of what she said, if that high wasn't protected, how would you know the price wouldn't be going up there?
That's the thing. If the high wasn't protected, I wouldn't took the trade.
Okay. And then also you said that the liquidity has to be inside of the gap.
No, it could be going in. It could be like on the outside of the gap. Yeah, as long as it's near the gap, that's the biggest thing. It has to be near it.
Can you show me an example of that?
So like, um, so like, let me see. Let me go to 1 hour time frame. See if we can find an example of that. I wanna find one that's an example of like a actual price tap into an actual gap. Matter of fact, what was the one that I just showed not too long ago? I think it was on a 4 hour. Yeah, right here, right here, right here. So we mark out this gap right here, right, and then we go to the 5 minute time frame. Technically, this liquidity is not sitting inside of the gap right here.
Okay.
Yeah, so like this liquidity isn't sitting inside of the gap; it's below the gap.
See, that's what messes me up because I'm like, well, it didn't go inside, it didn't tap it. So,
No, as long as it's near the gap, because the main premise of this is you want a place where price can stop after it sweeps liquidity.
so would you, at this point, would you draw like an order block on a 5 minute to,
So on this 5 minute time frame, right? If there's liquidity sitting right here, there's this gap right here. I want to find the nearest key area that's near this liquidity right here, right? Which is this gap right here.
okay,
That's
so,
inside of this 5 minute gap that's within this 4 hour order block, right? I mean, yeah, this 4 hour for Valley Gap, right? Or I would go to the 15 minute time frame and see if there's something in the 15 minute time frame right here, which is still would be this gap. There's a 15 minute gap. Just the higher part of the gap is right there.
okay. Okay, thank you.
Go ahead, Shay.
Do you still use the 1 hour for direction? Like, when you took the 4 hour trade, did you still use the 1 hour for direction, or you just went straight to like the 4 hour time frame?
No, I use the 1 hour for direction. I just use the four. I use the 4 hour for a key area because on a 1 hour time frame, this wasn't a key area right here. Like price did not tap into a key area right here. Price went above this order block right here. So there was nothing that it tapped into right here. So I needed to go to the 4 hour time frame to see if there was something. And then there was this gap right here.
Okay, that makes sense.
Go ahead, Nando.
Hey, thanks, boss. I had a quick question on what's giving you the confidence in terms of like your philosophy to wait for the trade to tap CE versus the opening. Like, how do you have the patience? Because
Um,
sometimes it, like ticks before CE. So I'm just curious to know like what could give us like more like confidence to be patient.
so I get this question all the time about what should I take CE? Should I take the opening of an order block? And I keep trying to tell y'all that it's always going to be based off of the where liquidity lies. If I mark out an order block and liquidity lies right below the opening, right? I'm taking the
Right.
opening, right? If liquidity is sitting right on the opening, I'm most likely going to take CE, right?
Okay.
If there's liquidity sitting below the order block period, and there is a there, and I mark out the order block, and the order block is small enough to where I can take a trade on the opening, but put a stop loss on us, put a stop loss big enough to cover CE. That's what I'll do because my goal is not to take a top tick every single time. It's
Right.
cool to do it, but I keep trying to tell y'all that that's not the goal. The goal is to find a sufficient trade.
Right. Right. Thank you. I appreciate it.
No problem. Go ahead, Kiki.
Thank you, Luchi. Hey, everybody. So I had a question. I believe we were around, I think, open around 9 a.m. where you found the the FVG at the higher time frame.
Uh-huh.
And so my question is, when you go down to a lower time frame, right, you have a bunch of more candles. How how do you choose which area you're going to focus on? Because I know you chose a order block, but
Right.
I saw like another fair value gap within
So
there. So how
so if I mark out this gap right here and I drop down to the 5-minute time frame,
mm,
and let's rewind back to 9:30. So this is 9:25, right? So this is what I'm looking at when I get up in the morning, right? So the only thing that I'm focused on right now, right? If I know that this is a protective high, right? I'm focusing on what I trade. I've been trading more and more order blocks than for value gaps lately because it's been hitting more and more on the tick with order blocks, right? Just lately, right? Last year I was trading more for value gaps because for value gaps was hitting to the tick, but this year it's been order blocks hitting more and more to the tick, right? So if I know that this is a protective high and this is liquidity, I only have two key areas right here. I only have just this order block and this order block. That's it. So I'm only going to mark out these two, and I'm putting a limit that's big. That's either at the opening or CE of this one, or at the opening of or CE of this one. That's it.
And then another question about liquidity. And so do you find liquidity at every swing high or swing low? Or like how do you choose your swing high and swing low when it's like choppy like this? Like this is a perfect example of how choppy it is.
So you want to base it off of the higher time frame, the 1 hour.
Okay.
So whatever swing low or swing highs on the 1 hour, that's what you should be aiming for, right? And then you want to use your lower time frame as a narrative to build towards that high or that low.
Okay. Got it. All right. Thank you.
Okay, go ahead, Sean.
Hey, God. Regarding the liquidity, it's always going to be
Your mic, big bro. Your mic, big bro. You gotta fix it.
here.
You sound like a robot.
So
It's still
it's
bad,
like
bro. It's still bad,
with
bro.
the liquidity,
It's bad, bro.
it's
Yeah,
still going back.
is your mic bad, bro? Come back and fix that. Fix that. Go ahead. Sus, SUSE.
Hey, I had a question about like the liquidity with like the order block on the higher time frames. Like,
Uh-huh.
how do you spot it? Because I still really don't understand liquidity for real.
Liquidity is just highs and lows.
All right,
It's highs. It could be session highs and lows, equal highs and lows, daily time frame highs and lows, right? Like right now, this low right here, this is liquidity, right? This high right here is liquidity right here.
all right. Can you show me an example like when you mark the order block on the higher time frame and then you find the liquidity on the lower time frame?
Um, so you want an order block
Yeah,
scenario?
yeah.
Okay, so this would be my order block right here on the hourly time frame, and then when I go to the 5-minute time frame, this is my liquidity right here and right here inside
Okay.
of this 1 hour order block to go higher.
Okay. Thank you.
No problem. B Shin.
Hi, how are you?
I'm all right. How you doing?
I'm good. So just a few minutes ago, you provided an example, a possible setup, where you went to the 15-minute to find the fair
Hold
value
on,
gap.
B. Hold on, B. Hold on.
Okay.
Somebody is all right. B, go ahead. You gotta mute yourself, B. I had muted you on accident. Well, not on accident. I had
Oh,
to mute
sorry.
the
I
whole
didn't know.
room.
Okay, so you provided an example of a possible setup not too long ago.
Right.
And I think you did it out of a 15-minute order block.
Yeah.
So my question is, I know today we took out lows and we're aiming for those highs. So
Right.
once we take out those highs, we are looking to go back down to take out the low. Is that what we're looking at?
That could be a possibility. Yes.
Okay.
I don't want y'all to get fixated on trying to catch 200, 300 points every single time though, right?
Right.
When you spot these highs and lows in these key areas, your main objective, listen, I tell people this all the time, right? When it comes to the way I make so much money, I take the same exact trades as y'all sometimes, right? I
Mm-hmm.
catch the exact same amount of points, 50 points, 60 points, 80 points, right? And I still come out with $7,000, $8,000. That's because I put more leverage on the table, right? Same trade, just different leverage, right? If
Right.
you start off with one contract, one mini, making $500, which is 26 points, and then
Mm-hmm.
you go ahead and you take the exact same trade once you build a buffer with two minis, taking 26 points, now you're making $1,000 a day, right?
Okay.
Then you turn around and you do three minis, 26 points. Now you're making $1,500 a day. It's just about building that leverage. I think people misconstrue that so much because they want to catch 700 points every single time they get on a chart, and that's just not the realistic part of trading, right?
Right.
Um, the point of trading is to extract as much. Is to first of all secure as much capital as possible, right?
Mm-hmm.
You want to go ahead and secure your own capital, right? You don't
Right.
want to give your capital back to the market at all. So um if you are consistently like giving your money because you are risking more to make more, right? When you could be risking the exact same amount of points, right, to make the exact same amount of points, right, with just more risk on the table, right?
Mm-hmm.
you end up you end up making a lot much more money faster.
Okay. I
Hold,
got you.
hold on, y'all. That was my mother. All right, y'all, come on. Let's go more Mariah. I said that right. I know I did.
Yeah, Mariah.
All right.
Can you explain inducement?
So inducement is a fake out. Okay. That's the best way I can explain it. To kind of give you an example of what that looks like, right? Inducement happens after liquidity is taken, right? So price reaches a area of interest, price sweeps that area, right? Liquidity within that area, right? And then price induces that level, right? It gives traders a fake out, right? Because most traders thought that right here in this area, most traders thought that this is a swing low, right? To start another swing high. Why? Because we've been on a swing low, swing high narrative this entire time to go back up, right? But this is inducement. This only happens after a liquidity sweep. It happens inside of a key level, right? Price sweeps liquidity into a key level, and then inducement happens. Once inducement happens, right, the real move starts to begin.
So you mentioned waiting for a liquidity sweep. So how do you know the difference between waiting for liquidity sweep and waiting for inducement?
Inducement happens fast. A liquidity sweep happens slow. So you
Okay.
see how like this is the liquidity, and you see how price took a long time to get back to these highs,
Yes.
but this high was taken immediately, fast, like immediately. That is how inducement is happening. I just did a class on inducement. Are you in my premium?
No.
Okay. Oh yeah, I just did a class on inducement. I did it with the free Discord as well. But it's a recorded class that goes over inducement. That's inside of the premium that I definitely recommend you go watch. It
Okay.
has a PDF that comes with it, and it breaks down inducement, and you'll also know when inducement happens because inducement is followed by a break of structure. True inducement is followed by a break of structure. I highly recommend that you learn what inducement is.
Got you. All right. Thank you.
No problem. Love.
Okay. How you doing?
I'm all right. How you doing?
Good. So I know that you say tell us all the time, don't count a trend. When do you know to base hit, like catch it on both sides?
Why would you want to do that, love? Why would you want to do that? Why would you want to do that?
Because I want it back in blood. I want all that. I want
Nah,
all that.
nah, nah, man. Nah, you can't do that, man. You can't do that. Listen. When you are looking to counter trend trade, it's always after a high or a low is swept out. Okay, that is the only thing that I'm going to tell you. Okay, all right. That's the only thing I'm going to tell you. I don't want to encourage you to counter trend trade.
All
Okay,
right, one
just
more question.
go ahead.
So you have a rejection block model. So when do you decide whether you want to take the order block or the rejection block? Because I know we've been or I've been studying the rejection block and I kind of like that.
It just depends on how lazy I'm feeling on the charts. If I just want to stay on one time frame, I'll take the projection block model on the 15 minute.
That's it.
Then Dansler. I said that right. I know I did.
So you know that example you showed earlier with the 1 a.m. Um
Yeah,
so how did you what gave you the indication that it wasn't gonna just go back lower?
because higher time frame liquidity was being swept in that area.
Okay.
There's always going to be a higher time frame liquidity that's going to get you.
Okay, and then my other question that I had was, you always say that ES and NQ go hand in hand.
Yeah,
So if ES took it out, then I don't have to worry about NQ taking it out, right?
exactly.
Okay. All right. Thanks.
All right, Stephanie.
Hello?
Hey,
Oh, wait. Okay. I had a question about finding the higher time frame key levels because
yeah,
I am one of those people who mark up like the daily high
yeah,
and close and stuff previous day.
yeah.
And for the most part, I have like an indicator for those
Please
and
take that off.
it does like sweep it and stuff,
Yeah,
and then I normally get in, but I either get in too late or too early. So I was just wondering like how to like see it that it's a fake out or
you
to
wait
wait a
for a
little bit
setup to
more.
present itself. You don't get in just because price swept the high and then started to retrace lower. No, you wait for a setup to present itself.
So you think it's best to wait for like a breaker structure for it?
It depends on what you trade, right? If you want to wait for an order block to be made, a for value gap to be made, a rejection block to be made, you wait for your setup to be to present itself.
Okay, because I did have that 4 a.m. I mean not 4 a.m. That 4 hour fair value got marked and I paper traded it, but
Yeah.
I got in kind of late. I got in like right after the breaker structure.
Oh, okay. I get what you're saying. But yeah, just definitely wait for a setup that you frequently take.
Okay, thank you.
Darren.
All right. Um, so for example, you mark this 4 hour fair value gap. You just showed us like earlier in the beginning of the
Right.
class.
Right.
Um, and then we have like equal highs on like the lower time frame, right?
Well, I wouldn't say
You
equal highs, but we got previous day high.
previous day high. Okay.
Yeah.
Ideally, you would want that to get swept,
Right.
right?
Right.
Price to um hit that key level, then enter your trade, or
Oh,
wait for
if I'm top taking, I'm just placing a limit right here
at
at CE. Yeah.
SCE
Yeah.
of that
Nice,
order block.
nice little, nice little nice little 20-point stop loss or something like that.
Okay.
You know, and then
But you said CE of the order block on the 15?
Yeah.
Okay. Do you typically do when you look for your confluences and entries, do you typically uh do 15-minute time frame, 5-minute time frame, 1-minute time frame, or it just really depends on
It really just depends, bro.
Okay.
Go ahead, Don.
Explain. I don't understand when you say we be pattern trading. Like you always say, but I don't know if I'm doing it or not. Can you just
Pattern trading would be you saw an order block and said, "Yeah, let me take that shit."
okay? Like just
Yeah.
without no extra confluence behind it.
without nothing behind it. You just said that was an order block right there. I know that's a supply zone. Let me take that shit.
Copy. Say
Yeah, it
that.
made no sense. All right, go ahead. Go ahead, YB. YB. Young boy.
Sorry, I was trying to unmute myself. So, how do you know if a high or low is protected?
Inducement. Inducement and inducement only.
Okay, so do you wait for inducement in the opposite direction of like your bias or like your key level? So let's say your order block on, let's say the daily time frame is your key level. So would you wait for inducement,
On the
like
1 hour.
bearish inducement, and then break a structure towards your key level, or?
No. I want inducement inside of my key level so I can trade to the opposite direction. I want to trade away from the
Oh,
inducement.
okay, makes sense. All right, one last question. So for the liquidity, are the wicks of the higher time frames liquidity, like the candle?
Yeah.
Oh, okay. All right, thank you. That's all.
All right. Go ahead, Black. Is that Black or Blick or Big? Black, Blick, Black. BLK. BIK.
Yep. Hey, Lucy. I got a question. You were showing example someone else earlier. I think it was a 1 hour time frame or 4 hour time frame where the market had went to the gap, but there was a liquidity before resting it. But where did that inducement happen?
You said where did that inducement happen?
Yeah,
Right here. Right here.
no, I think there was another example you were showing earlier. I think it was
I have no idea.
it was like one before that. Yeah, right there where your mouse is.
It couldn't have been right here. Maybe it was right here. I'm not sure. I don't know who that is, but for the love of Jehovah, y'all gotta stop coming off mute. So with inducement can happen on any time frame, right? It could be like right here, price swept out this low, and you don't clearly see inducement there. But if you go to the 1 minute time frame, you'll be able to see it a little bit clearly, or you'll be able to see inducement happening right here. Why is this inducement and not this? Because this is the low that led to a break of structure to the upside. Sweeping out this high, or breaking structure to this high, and also breaking structure to this high. That's why when price revisits this, it then starts to go back to the upside. Again, I highly recommend you guys watch my inducement video that I made to kind of break down how inducement works and what you should be looking for. Inducement is a very, very, very key concept that a lot of you guys need to understand. Unless y'all gonna get caught up in a lot of Jazzy.
Hi, Luch. I just got a quick question. What time do you jump on the chats to mark out your high time frame key levels? Like,
8
do you
a.m.
come
Central
in?
Time.
Say that again, please.
8 a.m. Central Time.
Okay. So for London session, would that be like 1 hour before London session starts?
Oh, you said no. London session starts at 2 a.m. So I would jump on at like
Okay. Thank you, Dan.
1:30 ish, like 30 minutes before, because I want to be woke, like
Okay.
fully awake. Marty, Mardia,
It's Marie, but
let's go.
so my thing, I think the biggest thing that I'm having issues with the way you mark up your chart whenever you're getting on it. How do you identify, like properly identify what is the level of liquidity that should or could be swept whenever you're going on I guess the daily chart? Are you looking at the 4 hour? Like, what is your determination of which wick that you're actually like marking out? I don't know if that makes sense.
So you want to you always want to identify. My first question when I get on the chart was, what was the last thing that happened? Every time I get on the chart, every single day, I want to know what was the last thing to happen. And that is what's going to determine what liquidity that I'm targeting, right? Just kind of give you an example. Let's like look at from like this standpoint right here, right? So if I got on a chart and this was the last thing to happen before I got on this chart, right? Because this is 9 o'clock. So at 9 o'clock, this is the last thing to happen, right? That means this is my high that I'm aiming for. So I then want to start to look for my trades to go back to the upside from here.
Okay, perfect. And then I have one more other question. What invalidates the change in state of delivery?
Price going below the change in state of delivery.
Does that have to be on a certain time frame, or could be any time frame?
The time frame that the change state of delivery is on.
No, I mean like you know how sometimes like it may wick. Does that invalidate it too? As long as it wicks, it invalidates. Because I know sometimes like people focus more on the body of a candle than the wick of a candle.
Oh, are you talking about like, let's just say like right now, right? This would be the change state delivery. Are you asking like if price wicks above this?
Yeah, does that still invalidate it?
No, so if typically if price wicks above this high without giving a change state delivery, we're literally going to crash down, right? If price does not close above this change state delivery, the very like almost the first time, you might as well cut it. Like, don't even try to trade bullish.
Okay, thank you so much.
No problem. Nikia.
It's Niqua, but that's okay.
Niqua.
Hi, Luchi. I just had a question about breaker structure. So how are we, just clarity, how are we supposed to be using the breaker structure? Because if inducement happened on the 1 hour time frame, and then if a sweep of liquidity happened on the 1 hour time frame, and so we go down to the 5 minute,
right?
Does breaker structure happen then, or like are we able to see
the
breaker
structure would start on the lower time frame, yes.
Okay.
So if liquidity sweep happens on the 1 hour, you want to see a breaker structure on the 5 minute
before we get into our trade.
Well, it depends. You know, if you know better, like if you know better and you want to take more of a high risk trade, high reward trade, right? Then you can get in before the breaker structure happens, right? You typically have to know where everything is going. But if not, right, then yeah, waiting for a break of structure and a pullback. An example of that, right, would be what day was this? Hold on. This is on a 5 minute time frame. What day was this? We recently just had a day of something like this. Oh, right here. Right here would actually be an example of this, right? So as you can see, we came down right at 9:30 and we at 9:40 and 9:30, whatever, we swept out this high, right? Now this low, right? This low led to a break of structure, which means that this is inducement right here, right? So this break of structure, now most of us we jumped to the 1 minute time frame, right? Now in the 1 minute time frame, you have an opportunity to get in early from here, right? Because this inducement would also be, play out from here, right? And you can then get into a trade once price retests this order block, right? Price closed above it, came back, retested this, order block, right, to then go higher. So you could do this, or right, you can wait for the break of structure on the 5-minute time frame, which would give you a more secure trade from there, right? And you then wait for the pullback to happen, right? Which it did, right? Price came back, pulled back to CE of this order block to then go higher.
Okay.
So yeah.
Okay,
All right, y'all.
thank you.
I'm gonna cut this short right here because the video is gonna be too long and I'm not gonna be able to upload it because Discord be doing too much. We'll do another Q&A. We'll do another Q&A. I do have to go call my mom back though, so I'll see y'all later.